Welcome to AVI Japan Opportunity Trust's January 2024 update. AJOT's NAV fell -3.0% over the month, weighed down by a -3.6% weakening of the Japanese yen. As anticipated, the Bank of Japan maintained overnight interest rates at -0.1%, while indicating that it was increasingly optimistic of hitting its 2% inflation target. In January, we observed a softening of share prices following a period of strong performance at the end of last year, with NC Holdings and TSI Holdings the largest detractors from performance. Meanwhile, Eiken Chemical and Daido were the two largest contributors. During the month, the Tokyo Stock Exchange published a list of companies that had disclosed information regarding the action to implement management that is conscious of the cost of capital and stock price. 40% of prime market companies disclosed initiatives, whereas only 12% of smaller companies listed on the standard market. Among our portfolio companies, 64% disclosed initiatives, higher than the average, which we view in part as a reflection of our engagement pressure. Although the Japanese market performed strongly last year, it was driven by large cap value stocks, which fall outside of AJOT's universe. This trend has persisted into the new year, creating a huge opportunity for us in overlooked small caps. In January, we initiated 3 new positions with companies that, on average, had 82% of their market capitalization covered by net cash, investment securities, and real estate. Eiken Chemical, new position contributing to returns. Eiken Chemical saw its share price increase 8% over the month, after announcing a 7.3% share buyback, of which 2.7% was repurchased through an off-market transaction the following day. Our engagement with Eiken Chemical is in its early stages, but we are pleased to see that management have already taken steps to address its poor capital efficiency by buying back shares at attractive prices. However, we are disappointed with Eiken Chemical's profitability and believe that there is significant room for improvement in product optimization and overseas distribution strategy. Although the EV/EBIT has increased to 8.8 times versus the 4.8 times when we initiated our position due to the increased share price and temporarily depressed earnings, we still foresee a substantial growth runway for the company, which, if successfully executed by management, could unlock upside in the order of 150%. We're excited about Eiken Chemical's future and building our relationship with management. NC Holdings, lacking direction. NC Holdings' share price fell -17% during a period without significant news. The market is looking for direction from NC Holdings' largest shareholders, AVI included. Unfortunately, while we achieved majority support on 6 shareholder proposals at last year's AGM, 3 crucial proposals were not passed. Management's apparent lack of urgency in improving the business and addressing shareholder concerns has left the company rudderless and investors without a reason to own the shares. This complacency was highlighted when NC Holdings management failed to respond to the TSE's request to disclose initiatives towards cost of capital conscious management. Since the AGM last June, NC Holdings' share price has fallen -30%. A significant underperformance relative to the MSCI Japan Small Cap Index. Now trading on an EV/EBIT of 3.9 times, and with net cash and investment securities covering 76% of the market cap, we see significant upside. Ultimately, shareholders are aligned in wanting to see a higher share price, and we don't think the status quo will continue. Although becoming less common as investors gain a better understanding of Japan's concert party rules, there are still instances where other investors are hesitant to engage in dialogue regarding common holdings. This is a great shame and an impediment to driving company reform through the type of collaborative engagement that regulators have been encouraging. We are hopeful that the FSA's report on the tender offer rule and large shareholding reporting rule, released on 25 December 2023, will help to alleviate market participants' concerns. The report reiterates that currently shareholders who collaboratively engage are not classed as joint holders unless there is an agreement in place to vote together. They propose further clarification to explicitly exclude institutional investors from the scope of joint holding rule if there is no agreement to make material proposals or continuously vote together. Thank you. Please subscribe to our fun page to hear more.